Okay, it says I'm live. Finally, we made it. Just came over here from our beginner live trading challenge, which was just before this, and I think somehow the IT got slightly overwhelmed with that. But we've got plenty of stuff to keep us busy with here this morning. Loads of data out. Ton of stuff happening overnight. Market's not looking particularly happy for various reasons I wish to explain. The first piece of data we've got in is the ADP employment change. And I'm just going to share my screen with you here. I appreciate your patience. I did restart exactly that. And it's out here. So the ADP, which is a private organization, it's actually a really good company. Have a look at the stock. They say we got 143,000 jobs created. We were expecting about 90 to 120,000. So that's a big beat on expectations. And where did they come from? The service industry, leisure, hospitality, education, trade. We lost jobs in information, AI doing its thing. Goods producing sectors, 26K in construction. Stronger hiring don't require stronger pay growth last month. Okay, so pay gains fell. So it's a good number. But maybe it's also not a scary number because pay hasn't gone up since. So we haven't had inflation here. So that's probably quite sweet from a soft landing miracle perspective. So we're kind of enjoying that here right now. So yes, there we are. We are live, right? Okay, brilliant. So let's, I just wanted to make sure we actually were live. I wasn't just talking to myself. So why is the market down then? And let me show you, stock heat map looks like this. Still a lot of red. It's improving a little bit after the ADP data. If I look at our trends vision set up here, when you can sign up for that if you wish. Where? Here? There? Where did my link go? There it is. And you can see how many exits we called yesterday, right? Like Shopify and DraftKings, so many things. Alto, where we just said like run yesterday. And this is the algorithm doing its thing and just saying, hey, get out of these things because it's starting to look bad. And say on something like Shopify, the stock's down 50%. Our little indicator is up 9.6%. So it works to get out of stuff that is it's not worth holding. So we'll look at that in a little bit more detail in a moment. But why is the market actually down this much? What's really happening here? Well, we got data out yesterday that says the manufacturing data is real. Lost in the PKK says, when are we going to be able to set favorites for the trends and not all stocks? Interesting. We've done a little bit of that, my friend, under the hot category, which is new, which is basically the big stocks, what gets traded the most. It's talked about the most. You probably find most of your favorites in there. But if you don't, let me know. I'm always happy to add. But back to the recession. Lovely. It's not a real recession, but just manufacturing is coming in at pretty bad. If you just joined me on the beginner live challenge, which continues tomorrow, by the way, then you will understand or start to understand why risk management is everything and rules-based trading is everything, because that's how we're up 93% so far this year. Yeah, 93%. That's not a typo. And if you look at our live trading portfolio, you might be thinking after 2 horrible days, we should be horribly down. This is a 30K portfolio, right? We're up $1,000. We closed everything else right now. We'd be up another $1,000. So we'd be up almost 100%. We won't, because we've got rules. So when we close these out, not just market whims, but seriously, come and join us tomorrow. Last chance, 1 hour before this kicks off tomorrow at felixfriends.org/challenge, and you'll get day 2, which is trading rules and actual trading. So you really get the hard stuff, which is going to be most useful. And well, I don't know if it's most useful, but I think it's going to be very useful. Now, you might have seen the headlines in Israel, lots of missiles hitting Tel Aviv and so on. We haven't really got a proper report yet of damage, but we do know some of them got through because Iran fired ballistic missiles this time. Last time they used mainly drones, which are slow. Ballistic missiles are much faster and therefore much harder to intercept. And it does seem that definitely some of them got through, hopefully with no casualties, at least nothing confirmed yet. Because you know they have bunkers, right? Under every apartment building in Israel, there is a bunker either in the basement, or if it's a modern building, they have a bunker room in the apartment. So there's a part of the building which is like super fortified. And I know this because my personal trainer lives in Tel Aviv, which might seem inconvenient, but it's actually incredibly convenient because we can do it on Zoom or whatever we use. So they have to unfortunately get up in the middle of the night and run into their bunker, which is obviously massively irritating, but useful. So what is this showing you here? This is showing you what the oil price does after kind of Israel-related wars. And there isn't really a hard rule here. I know it's spiking today. If you look at the oil futures here, they're all up. You see, 2-3% up. But I actually don't think this is going to last. I think the economy is slowing down globally, Europe particularly. That is actually going to keep putting pressure on the oil price. So I don't think that inflation thing is something to use. And then we've got this chap here, who must be one of the least likable people I've ever come across, that chap here. Harold Daggett is leading this strike across US ports. And US ports are something from the Middle Ages in terms of technology and automation. And I appreciate these guys want to keep their jobs, and I appreciate they want to get pay rises. I get that completely. But that guy, Harold Daggett, you know how much he makes? He makes, I think, $870,000 a year. So I don't really know what he's shouting for. But yeah, that shutdown causes shortages in products. It causes inflation, and it causes a significant slowdown in GDP and economic growth. So it's kind of the worst of both worlds. So hopefully they come to a consensus. And let's face it, I mean, I'm sorry, guys, but you're mostly going to get replaced by robots. That's just the reality. It's like modern ports have very, very few people in it. US ports have a lot of people in it. And that isn't fair. I get that. But that's just progress. So if you're working in an environment where you do a similar task every single day, I say this all the time, learn something else, bring in another income stream, learn AI, because it's coming for you, unfortunately. So that's one thing that's definitely got the market spooked. And you're going to see shortages of goods in retailers pretty soon. It'll happen pretty quickly. You won't believe how just in time the US economy is run. So that'll be interesting. One of the things that we're making money out of is this, VIX. And I think we talked about this about a week ago. I think we might have even set up the trade live here together. And it's the fear index, right? And it's been very, very low for a long time. This here was the 5th of August Japan crash. That was pretty unusual. But right now it's trading at about, 20 or something like that. And so we're making some nice money on that. So what are we going to do? We're going to set up an exit on this, some sort of trailing stop loss, which means that if it does go down to say here, we're out and we're taking some profits rather than losing money on this thing. Optimus will replace Daggett. Yes, you're probably right. Tesla is crashing. Okay, we'll have a look at that in a second. We look at all your favorite stocks, just ask. But honestly, take a deep breath here. Unless you think the US economy is going to spiral into the abyss, the market should go up. After the first rate cut, historically, this is cut number 1, right? The market has, in the following 12 months, gone up how much? About, what is that, 13%? If you don't get a recession. If you do get a recession, okay, gloves are off. If you do get a recession, you go down by about minus 15%. But given how much money the US government is spending, which is an insane amount. They're spending like we're in the middle of World War II. It's very unlikely you're going to get a major recession in the US. I mean, yeah, very unlikely, I think. So parts of the economy are in a recession, manufacturing is. But I think with all the spending, it seems unlikely. So, if you zoom out a little bit, Scott, if there's one of the best things I learned from Felix, it was VIX. Very, very, very nice to hear that, Scott. Brilliant. So, as I say, you can make money in all markets, right? Come and join us tomorrow if you missed today's session before this at 8 a.m. Eastern time. That's an hour before this call kicks off. And I'll teach you my 3-step system. We'll do some real trades together there. You can ask me all the difficult questions. So come and join us over there. But let's have a look at some of our favorite stocks and see what they're up to. Tesla is, it's Tesla trading at, let me just double check. This is live data, as it should be. It's trading at 247.77, so not looking particularly wonderful. Now, is that enough to panic? I wouldn't say so. We've had a very nice run up here. We didn't exceed the 262, unfortunately, here. But today is kind of about just a little bit of global panic, a bit of like Europe data is bad, the madness in the Middle East and strikes and so on, which would affect Tesla, right? They import a lot of stuff. I think it'll pass. I think they'll find a solution to it. And even if the strike takes a long period, even if it takes, weeks and then the government steps in and then they get that 6-week break and then they do it again, the outcome eventually will be automation. It will be faster, speedier ports and perhaps more onshoring of manufacturing into the US, which would actually be good. So, I quite like that. And yeah, Tesla delivery numbers are also out, right? The Tesla delivery numbers are out here. Use money check. Never seen that before, but upcoming. Are they out today or are they out tomorrow? Are they out? I haven't seen them yet. Oh, here we go. 3 minutes ago. Tesla delivery numbers are up 6% year over year. Well, that's pretty good news. Slightly above Wall Street expectations, not a lot. Shares were down 1.4%. Tesla got a report, blah, 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 blah. Solid growth, blah, blah, blah. Okay, so yeah, they're okay. They're not like out of this world, wonderfully amazing. Stock's down a little bit, but that might just be the general sentiment here this morning rather than those delivery numbers. I think that's okay. Paul, thank you very much for smashing that like button. Much appreciated, my friend. 150 of you have found the like button. 1,000 of you haven't. This must be one of the world's worst live streams ever. But yeah, do your worst, my friends. So yeah, there is Tesla. If you look at, say, Palantir here, I mean, overall though, Tesla, okay, look at the last, since the beginning of 2022, which is how far back our indicator goes here. Tesla is down 44%, right, which is improving. Without a little trading strategy, like when it turns green, we buy. When it turns red, we exit. We'd be up 81%. Right? Past performance is not promise of future performance and all of that, but it gives you a pretty good view of how I think one can be smarter than just holding on to stuff. Well, that's what I do. So I don't just think it, I know it. At least it works for me. So if you want to check that out, tradevision.io, check that out. There's a week's trial to it and you can play with it to your heart's content, and you can do the same for any major stock out there, whether that's SPY, which is up 19% over since the beginning of 2022. We're up 34% because we aim to ride the ups and not the downs. This is just pure buy and hold, no leverage, no shorting, nothing like that. And it works better on some stocks than others, but it tends to work pretty well overall. Apple, for example, is up 23%. we're up 49%, right? So just by being picky. We can have a look at, say, Palantir, for example, here. Very hard for us to actually beat Palantir because it's so insanely erratic. That stock's doing all right today, 0.7%. Why? War's kind of good for Palantir, right? What was up yesterday was the Lockheed Martins and the Northrops and, that kind of thing. So the likes are uptrending. Thank you very much. Almost 300 likes. The other 700 are still so asleep. They can't find what the button is or they're not logged in. Thank you very much for those, Lawrence. Appreciate that. So Palantir looking pretty good. SoFi is down only half a percentage point. These are not really big moves. Nvidia is flat now, and that's an improvement because if you look at hang on, this is post market. Yeah. When I looked earlier, we were at like 114. So we've recovered a little bit here. So it looks reasonably promising. I think the ADP data should have people feeling quite happy, which is basically come in stronger than expected. So more jobs created. It's private data. Israel vows retaliation for massive Iranian missile attack. Could come within days. Oil infrastructure, military bases. Ooh, that could be when things get a little bit more serious, right? School, thankfully no one's in those in the night, I would imagine. Does it say anything about damage? No, I think, but there's definitely some here. Okay, that looks like a home. No, they haven't really given us. They're keeping it close to their chest, I guess, but it'll come out during the day because well, there is media and social media, right? So we'll start to see a little bit more about that. What's going on over there? Buy oil. Yeah, I'm a bit cautious on that. I just think because the fundamental demand for oil isn't there. Now, if you're a day trader, maybe, but I think otherwise, be a little bit careful. Hugo, hello there to Indonesia. Appreciate that. Ben says one casualty in Ramallah. Okay. I think there was also a terror attack where somebody went on a rampage and killed some people at the same time. But someone's long oil. Seriously, I'd be cautious on that. If you think the economy is slowing, I'd be cautious on oil, but that's just my perspective. We got oil in here. Hang on, let me see. I'm not sure. No, I don't think we do, right? As a US commodity index, but yeah, no, we haven't attempted that yet with our indicator. But if you look at US oil, it's there is a very significant downtrend. If I just give you a few lines here, that is the downtrend, and we have not meaningfully broken out of that. And until we do, I would be very, very cautious. Oil, also the RSI is very negative. What do you think about Dell? Yeah, Michael Dell selling what 1.2 billion or something like that, right? That'll tank a stock, and that's exactly what's happening here. So. I don't think the momentum is very, very favorable at the moment. I think in theory, they should have a good growth story with the whole AI replacement thing. But then if you look at Apple not able to allegedly get some growth out of it, maybe Dell will also struggle with it, right? So we got to be a little bit careful with that, I think. What else do we have here? Eric says Rheinmetall, which is a German defense manufacturer. I just don't think defense spending comes from the US. They're not going to give it to a German company. That's kind of the whole point of NATO, that everybody in Europe has to buy American defense goods. So I would, if you wanted to invest in something like that, I would put my money on US defense companies, not the European ones. Before the war, everyone fills oil with tanks, the oil tanks. Okay, but that's like a local demand thing. That isn't going to actually drive prices. Cancer says, because shopping at a Christmas market is, wear a stab-proof vest. Better yet, one of those full bomb disposal unit suits, right? And it's a mad world. Backpost says Intel. Let's have a look at Intel. And Intel's had a horrible run, right? Intel is down 61% since the beginning of 2022. Yeah, 61% would have been buy and hold. We've done better. We would only be down 22%. Not a massive win, but actually it is. It's a 40% better than buying and holding it. But no, it's hard to make money on something that just keeps going up. And then, we just, every time it goes up, it basically gets attacked. So very cautious on Intel, to be honest with you. I think they've got a long journey ahead of them to undo this. And even if you do break out, so even if you do get a rally, so say the stock, magically does this, what's going to happen? Where do you think the resistance sits? All these guys who bought here, right? All of those guys, they're all out. All the people who bought there, when the stock goes back to those levels, they're like, man, so they're selling here. Stock goes to here. These guys are selling here, and they're all buying NVIDIA. So I'd be very, very cautious on stuff like that. That's just like has this massive overhead resistance here. Paul is trying to add some real charm to this channel, so I'm going to ban you, my friend. How do we do that? We can report you. We can just hide you on this channel. So go bugger off, Paul. I just did. Yeah, he's banned. You will never see him again. Paul Danino is a twit. Visa, quite rare actually. We get proper scammers, spammers like that because we have a little bot that tends to take most people out. But you get the occasional idiot coming through. And, I love people who disagree with me, by the way. You're always welcome to do that. Just don't be a moron. Visa, it's done very nicely. Very, very nicely. That recovery there, let me have a look. Is that enough? It sort of is and it sort of isn't. The problem is that it does look bullish. Right? I love the stock, don't get me wrong. What is this? Canadian hedged Visa? Who needs Canadian hedged Visa? Maybe it's some sort of tax thing. But you've got that resistance. You've got this resistance, that resistance, this resistance, that resistance. So in effect, you've got this massive zone here of just, it's always a zone where people are going to sell when you get there. So it's going to, you got to ask yourself, you get into something at 277 and there is resistance at 279, is that worth it? For me, the answer is no. I need a little bit more room above so I can jump. Right? Chris says, Felix, you're wrong. Brilliant. I love you, my friend. I also love that, you are explaining that so nicely. I named my son Felix last week. Doc Wahoo, well, that's fantastic. That's a beautiful name. I'm sure he's going to be very, very lucky. And he will be compared to cat food. But congratulations on your son there. Chris, I paid for the full argument. Okay, I know what you're up to. You're not going to drag me down into that world again. For you Monty Python lot out there. So let's look at the live market then. I paid for the full argument. I mean, if you think the world is a terrible place, go and watch some Monty Python clips on YouTube and everything is wonderful again. Tesla down 3.8%. It seems the market is unimpressed by the delivery numbers, which came in exactly as expected. Love the Python reference, indeed. So there is that. Someone was asking about PayPal. Let's have a look at PayPal. And where is the resistance? PayPal. I'm loving PayPal right now. I just recorded the video today on what the CEO just came out with. So PayPal is down since the beginning of 2022 by 65%. Rather than buying and holding it, we are basically at break even, which isn't brilliant, but it's 65% better if you follow our little indicator here. So we called a buy signal here August 14th at $66. We're $10 up so far, which is a pretty sweet deal. And there is some resistance, but which is, I guess, this zone here, right? You see that flat zone there? And you're going to get a little bit here at 86, and you're going to get some here at 100. That'll probably be a little bit of a tough nut to crack. And then you go to 120, and you sort of work your way up through these resistance points. But the longer they are away, the further in the past, the less relevant they are. But I do look at 2 years. But no, I like very much what they're doing over there at paper. And paper looks flat. And again, that's a good thing. You see, a very, very long flat period. You know what it does? It shakes people out. Everybody who wanted to sell has had 2 years to sell. Therefore, they probably have. Which means when we do get the good news and the catalyst and we do break out, then breakouts tend to be much bigger and stronger. Obviously, we still have to wait and see when it comes. But, you know, I think it probably will. Paul. No, you're not banned, Paul. Humor is very welcome here. No, Paul, I didn't betray you. Just the twit, you couldn't spell the N word. So what have we got this morning? Apparently more jobs. And this one is actually real data, I think, because it comes from the ADP and they're a little bit more independent than the government. But he's saying stronger hiring didn't require stronger pay growth last month. So I still think the jobs market is slowing down, which is good and bad. It sort of says the economy is slowing down a bit, but it also isn't causing inflation. So I think there is a silver lining in there somewhere. And the market is definitely red today. Tesla is leading the rally down. Delivery numbers are as expected, and the market is disappointed. That's a funny thing, isn't it? Did we do SoFi? Paul distracted me with his hello. SoFi earnings call, it should be interesting. Absolutely. We hope they continue to perform as they have, which would be good. Amazon, have a look. We can do two things. We can look at the minute chart here, pre-market, live now. We're slightly green on Amazon, which is good. Trend-wise, yeah, we called it a buy here at 178. Our indicators are pretty good. We beat Amazon's only done 5% in the last 2 years. We're up 37% if we had traded our indicator here. So nice rally, but we had a long kind of misery here and we didn't trade that, right? So we get in when it's green and get out when it's red and say this is trade vision. Play with it for a week. You can get yourself a trial account. So yes, we have this sell-off here and I'm not loving it. That's not a reference to MACD. And there are two ways of looking at this. Maybe there's just one way of looking at this actually is, so we had that high here, we had this one there and that one there, right? So you kind of want to just connect them. And that's your resistance zone. And we're kind of getting pulled back into that. Next resistance will also now be that high there. But you get 3 points like that and you break below it, it might be time to get out because you might find yourself gravitating back to what's the previous low. And we generally don't enjoy that sort of thing. Miguel, hello there to Mexico. Appreciate you tuning in. Will the scandal affect the stock? What scandal? There's a scandal. I want to know about the scandal. There's apparently saucy data here that I'm missing out on. Biotech is getting pummeled today. Why is biotech getting pummeled today? XBI really getting pummeled here this morning. 1% down. Any reason? No idea. But the chart is always right. That's really all you need to know. Sometimes you don't need to know why. You just need to know what the chart's telling you. Actually, that's most of the time true. So might have to bite the bullet and close out our trade here. It's really hanging by a thread. So let's see what you guys are asking here. I'm Andy. Appreciate you tuning in. MasterCard was fined for breaching competition laws. Well, Master, Visa card, they're all doing that, right? But I don't think it really matters. Stocks down 0.8%. They're still on the trajectory, I would argue, is still sort of alive. Depends on how you want to draw that, but something like that. So if you are a large company, you're going to have run-ins with regulators. If you don't, then you're not pushing hard enough. That's the way I look at that. Visa has done terribly for you this year, has it really? Well, it's a long time horizon. It depends on when you got in on this, but fairly hard to lose money on it this year, wouldn't you say? But it's been a tremendous one. I mean, just zoom out, right? Literally, this is what it's about. Zoom out, and it was $29 or something. It's done a 10x in 10 years. So it's a pretty good business, I would say. Can you look at gold, please? Well, I'll pull up the ETF. You'd expect gold to do well on a day like today, right? Lots of uncertainty and so on. And the bull run is still there. It is still there. We have a little bit of resistance now here at the top with those two highs there. And we're a little bit below that, but still very much a bull run. So just be careful. Ola says, do you think 2025 will be a bear put strategy? Really depends which way the market goes. I mean, I don't really try to make long-term predictions like that. I think in the long run, so years, the market will go up and we'll make money. And in the short run, it'll be somewhat volatile and we'll make money out of that. We'll make money out of the moves and the volatility and what the charts tell us. So, VIX is up to almost 20 here today, which is quite sweet. So we're going to set something up so that we take profits, I don't know, maybe at 18 or something like that if it comes down, but maybe it'll go a little higher. We'll see. So there we are. Come and play with our lovely indicator here in Trade Vision. I think you can have a lot of fun with it. I think you can learn a lot with it. And the goal was really just to simplify chart analysis, because I know it's a pain. And say on something like Tesla, which is down 44%, the indicator actually brought us in 81%. Pretty big move, right? And it doesn't work equally well on every stock, but we're transparent with you about it. You can just look in the top right corner, and it'll give you that story whether it works. And there are really two scenarios where we struggle. Things that go up in a straight line, very hard to beat them. Meta, for example, is easy to beat. Meta's up 49% since the beginning of 2022. We're up 175%. And also just some things that are just crazily erratic, just really, really erratic. Smaller stocks tend to do that. So we tend to do better on the bigger ones because they follow a little bit more the rules than the little ones. So Microsoft and Google, we're still beating quite nicely. Google here, say, it's done only 3.8%. We've done 21%. So it's pretty sweet by avoiding some of the downs. The chart has changed. We still have that, Sandra. Just click on the advanced chart, and that'll open that up for you, which will give you all the details. And you're obviously super welcome to use that. The indicator is still here. The support resistance from market positions is still here. It's just a little bit more complex than the kind of clean view that we have here. So there we are. I love you for watching. I love you for tuning in. Thank you very much. Check out tradevision.io. There's a free trial. If you don't like it, you just cancel before the end of the week and you won't get charged a penny.